Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is Stock Market Analysis Weekend Edition for today is Saturday, June 14, 2014. Quick message to my subscribers, just a reminder that I'm currently accepting enrollment for the video analysis coaching program. Check your emails. An email went out Wednesday evening talking about it, and there is a page on the website that talks all about it, and I've got a video that goes over it as an introduction also, so take a look at that. All right, let's take the Dow was down 148 points for the week, and we've pulled back, but we haven't broken down below the bottom of this diagonal yet. We're in this congestion. All right, on a daily basis, the Dow is down below the 10 EMA. We've got a little bit of a pause. Sometimes we pause and continue down. Sometimes we pause and create what I call a little bit of an M top. Let's take a look at that. What I'm talking about is you get a move back up like this, then you get the move down, okay? So similar to like in here, then you get a move down. A lot of times we're looking for, M tops or W bottoms. Sometimes they even, do this little kind of thing like this. Okay. So, and sometimes the M tops will do, moves like that. Then they'll come down. So just some things to be aware of, things to be looking for, especially like on the indicators and in the stock market in the price action. Okay, so right now it's going to need to break down out of this trend line, get below the 55-day moving average to confirm a breakdown out of this pattern. And the S&P 500, similar type scenario that we're looking at. I would be looking for the S&P to break this trend line, similar to the way it broke this trend line back in January. And notice also when you get this first move down below the 10, you get this pause bar, you rallied back up above. So again, it's kind of like creating that little bit of an M top type scenario that's possible. On a weekly basis, the S&P 500 is still just looking like it's just trending. Now it's up above Keltner channels. It's gotten a little bit high, but we don't have a strong trend reading. It's right at 20. It's not even above 20. It's not at 30 or 35. There's nothing strong going on about it. And we'll continue to get divergence on DI plus here. We're not showing up on the RSI though. So again, we're going to need more action to break down to truly sit back and say, yeah, it's heading down. Right now, it's currently heading up. So the Nasdaq, same thing. Now the Nasdaq on the daily basis is staying above the 10. It hasn't broken below the 10. It's riding the 10. It gets above the 10 and it rides it. Okay, it's a tendency that, that's what I look for. Look for this in the stocks and in the indices. It gets above the 10 and then they ride. So on a weekly basis, the Nasdaq, the 10's actually gotten above the 21 again. Now it's possible we could be getting a big M top in here, but I thought maybe we had a possible little head and shoulders, but this is just drawn out way too much, I think. So right now you just got to sit back and say, well, it's trending to the upside until it starts to break down. So you just got to stay with it. You got to go with it. So the short-term trading index, we did get a very low reading, 0.57 in here. We've had readings like that before, but I'm really looking for the blue line to get back the 10 EMA, which is the blue line, to get down below 0.9 as a reading like it did back here, to signal that we're at an extreme. We're not there yet. It doesn't, the market doesn't have to have that. And it seems like the market looks for the best way to fool the most people, most of the time. Now, if I were to look purely at the VIX, I'd sit back because I see this little hook bar in here, like this little W bottom and a little hook. I would think that the next move is to the upside. And if the VIX goes up, then I'm thinking the market's probably going to drop. So that I'm, like the hook is the other way here, you get this little hook up and then it swings down. It's like a little fish hook, hooks up, swings down. So it's just some things to look for. Does everything always happen that way? Not necessarily. But right now, if I had to bet, I would sit back and say, probably a good chance we'll see some selling on Monday, but we'll see. All right, that's the, let's see, the high-low. I don't think the high-low is telling us a whole lot more. It's kind of going sideways in here. Not a whole lot to signal at all. Take a look at the ETFs, semiconductors. This has been on fire. It's been riding above this 10, like I've talked about. It's just, and it's way above the Keltner channels. This could turn into a little bit of divergence showing up in here. Not super strong. Actually, I mean, the trend is super strong. The trend, the ADX is at 35. But this doji type bar standing out by itself well above the Keltner channels, you get a down day and it's going to turn into like an evening star reversal type thing. I mean, or, you know, and maybe it's not exactly, I'm calling this an evening star. It may be another type of a reading for it. But when I see a doji like that, it's a possibility for a reversal setup. So, but again, the key takeaway here is that semiconductors have not been leading us down; they're leading us up. So that's the mixed signals that we're getting. Home builders, on the other hand, have been a little bit, moved to the downside. You know, got this new high back here in February. Then we go to a lower low, go below this low here. Now we rallied back. Almost to the basically to the trend line, slightly over, throw over to the trend line. Now we've pulled back down. We've broken this 4-week trend line. We're back below the 10. Will be interesting to see, do we get continued selling down to the downside or not? Is this some type of a wedge formation, like a little rising wedge? I mean, you can almost make the case that it is. It's not super clear. And then the last ETF we'll take a look at is the financials. And again, these guys were again signaling they're pushing to the upside. Now we've had this pullback and down into here, and we may get further pullback action. But again, we're not getting divergence with the stock market. You know, the stock market going to new highs. Well, these guys aren't. Well, these guys keep pushing. You know, push to new highs here, now pushing to higher highs here. So not leading us down yet. Okay, so those are the ETFs. Let's take a look. We're going to take a look at Apple, CREE, Rackspace, and storage, Seagate. I always want to say storage technology, Seagate Technology. All right, so let's start off with Apple. Did I look at everything? Yeah, I did. Okay. All right. Here's why I think, we've got a various series 1, 2, 1, 2, 1, 2, because we've got overlap going on. Okay, so it can't be 3, 4, it can't be 3, 4. So you got to continually break it down to 1, 2. Now you find they're getting 5 waves. 1, 2, 3, 4, 5. And why do I think this 5th wave is done? Is because I think I see 5 waves in here. Okay, I think there's 5 waves in here. And so I think there's a good chance that this is complete. If that's the case, and then we're kind of looking at, here's a wave 1, here's a wave 2, and here's a wave 3. Okay, this bracketed wave 3, rounded brackets. Okay, rounded bracket wave 3. These are square brackets, wave 1 and 2. So if you look back and say, okay, well, what did rounded bracket 2 retrace of 1? Okay, so let's measure that out. So here's wave 1. Take it to the top. It retraced 61.8%, slightly over, but a nice deep correction, which is what you expect on a wave 2. Okay, so let me get rid of that. So now, usually that means wave 4 will be the opposite of that. If wave 2 is deep, wave 4 should be shallow. So typically, if we look at, here's wave 3. So a wave 4 then will be somewhere between 23.6% and 38.2%. That's the expectation, somewhere in this range, which puts it in the range of 89.25 to 85.75. Okay, so I had a guy after the comment I made last week that I thought this might pull back to 85, which is right here in this wave 4, right in the congestion. You could get support in here. So like this will never pull back to 85. The stock market will have to be crashing for this to pull back to 85. And I thought, well, okay, whatever. You know, I mean, number one, don't ever use the word never with the stock market, because there's no certainty in the stock market. You have no idea for sure what's really going to happen. and anything is possible. Okay, so we'll see where this pulls back to, and my expectation is again that this is a wave 4, and then that would mean we turn around and we're going to head wave 5 that should take out these highs and push to new highs. And after we get the retracement, we'll look to see how far do we think wave 5 will carry us. Now, a wave 4 pullback should not exceed the high of wave 1. Okay, so if it goes below 82.16, then we got to totally reassess what's going on, because it should not to continue this 1, 2, 3, 4, 5 type action. Okay, so that's my take on Apple, and let's take a look at CREE. All right. Now, I'm trying to remember what I did with all these projections in here. Okay, I think, all right, couple things going on with CREE. I think we're in this big move down to the downside. Let me shrink it a little bit. Okay, I think, you know, we've got some movement, several waves down to the downside here in this corrective action. And so when I look back and said, okay, this move here, this last big move down, 50% rally would put it right about here. Okay, so that's just as a marker. A 50% rally would do that. So let's get rid of that. Okay, so now when I looked at what we got going on, I thought, well, this looks like a little bit of a zigzag correction, like an A, B, C. Well, usually in a zigzag, C, which would be, let me put the C, we expect a C right about in here, capital C. Okay, C should be about equal to A. Well, it's about equal to A at the 100%, okay? Because what you do with this, let me see if I can get this. What you do is you measure this out, and then you come back and you start the wave down here, and it says, okay, at 100%, that means A equals C is right here, and that is right at 51.39. So call it 51.4, okay? So right about in here, so that's a little bit higher. It's a couple points, not quite a couple points higher from where we are now. And given that we've got a strong down 55, sometimes you'll rally above that in a counter trend move, rally above that hard moving average, but you won't go that far, okay? And then you'll pull back down because the momentum of the intermediate trend is just too strong. And yeah, your short-term trend can pop above it, but not for long. And so that's my take on what I think is happening with CREE in the short term. The next one is Rackspace. Rackspace is a little bit spastic, but I think this may be an impulsive move here. This may be the start of a new rally move. And here's why I'm thinking that. Pardon this. I'm using this for another a lesson that I'm creating about gaps and measuring gaps and how you can use these gaps to measure distances and projections of where you think price is going to go. So I don't want to erase that because I'm using that for another video. Anyway, so now I think we've had this big rally in Rackspace. I don't have all the rally in there, but now I think we're corrective. I think we've got this A, B, C correction. And now, because of this impulsive type move, I think it's a good chance that we're moving to the upside in here. And the moving averages are breaking above. You got 21 above the 55. 55 is trying to turn up. So we'll look to see, do we get a little bit of a pullback and then a setup? Do we get a setup and then break this trend line? You know, so I'd be looking for an opportunity for a setup, possibly try to get in and go higher in here on CREE. So that's my initial take. Don't see the setup yet, or on CREE, Rackspace, not CREE. All right, so that's Rackspace. And the last one we're going to take a look at is Seagate Technology. All right, again, I think Seagate may be completing. Now, let's look at the scenario. All right, if you look at this as a 2009 bottom, okay, I think we had one big wave move up, okay, and then an A, B, C correction because this point went lower than this point, so that means it's still a part of the correction. So here's a wave 2, A, B, C, wave 2 down. So now you got this this big wave 3 that's going on. I think here's wave 1, wave 2, wave 3. Now I think we're doing an ABC wave 4. Now the only concern I've got about this is I'm not sure that wave C has gone far enough, because it's only about 62% of wave A. Typically I like to see it at least equal to wave A. So I'm a little bit concerned that this move in here is it impulsive, or is it still a part of a corrective action? So that's my caution. I've got a question mark on C, so therefore that's kind of a question mark. But we're just gonna have to watch the action in here, because I do see potentially, 5 little waves. It almost looks a little bit like a 5 wave, which would mean you get a pullback in here for a little wave 2 and then to go and break the trend line. But we're just gonna have to look to see if anything sets up, anything further develops, with the caution that I'm sitting back going, okay, I'm not sure this went far enough to the downside. Okay, so that's Seagate. That's my take on where Seagate's at. That's the 4 of them. All right, we'll be back tomorrow with trade ideas. We'll look at what we had this last week as a review and see if there's anything new this weekend that's showing up for the coming week. All right, this has been Joe from Beyond the Chart, and all you fathers out there, have a great, happy Father's Day. We'll talk to you tomorrow. Thanks for stopping by.